Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at DRYS and BONT. We're going to take a look at multiple time frames. So here, let's take a look at the DRYS daily chart. And so RSI is up here at 76, so now it's in the overbought power zone. You've got Fasto at 78. There was a big breakout here on plus DI. Notice how ADX, the black line, crossed minus DI to the upside. The bulls have really taken control here. So there was a bottom down here in August. Notice the low down here in August, and that was followed by a nice strong uptrend. Yeah, if we look here. So there's been this nice steady uptrend. The middle Bollinger Band has been holding on the pullbacks, and today there was a breakout above the bottom of the gap. So notice back here in July there was this gap, and so the top of the gap is right above where the upper wick on today's candle hit, right above high of day, and then the bottom of the gap was just above the was right around the opening price today on the bottom of today's candle. And so basically today there was a gap fill. So you've got this climax event where the gap now from back in July has been filled, and so in order to head higher it's gonna have to break out above the top of the gap. Notice how this was a key resistance, a key support level back in July. Now that turns into resistance, so it's going to need to break above these two red lines here, and then that would end up putting the 100-day simple moving average at 956 on deck. So this is the big target, the 100-day simple moving average, if it can bust above top of gap resistance. So notice the candles have been riding EMA 4 support higher the last several days here. So if there's a close below 423, that could signal consolidation, and then the level to hold on a pullback would be the middle Bollinger Band down here at 326, and the 50-day simple moving average at 292. That's the green line down here. So this is a really nice steady uptrend here for DRYS. We're always on the lookout for dilution for the stock, and so if you look at the 15-minute chart here, you'll see here at the end of day, this is a 3-day chart, and so there was a nice break yesterday. Okay, first above the middle Bollinger Band, this candle at 145, that signaled the chart was heating up, and then this candle at 315, that put the stock in play because now it's above the 50 and 20 simple moving averages. The middle Bollinger Band is the 20 simple moving average as well, and so the candle started riding EMA's 4 and 8 support higher. It's holding EMA 13 on the support test, super strong into the close, riding EMA 4, and then there was this big climax spike. Notice the run to high of day, and then a long upper wick formed. It did close just below EMA 4 at 499. That's the key level to try to hold for being super bullish. Notice there was the big volume spike, and so there was a dump end of day. There was profit taking, maybe some shares being sold, and so if the candles do work back, if this 5 level turns into resistance, then the big level to hold is going to be this middle Bollinger Band down here at 450. It needs to hold that level to keep the uptrend going. If it breaks, similar to back here on the 23rd, then you could see a pullback. And then on a pullback, we'd be looking for a possible bounce off of the 50 SMA at 417. So to the upside, if there's a break above the high close here, that's going to signal it wants to head higher. And then if there's if it breaks above this 525, or just above 520 zone, then you've got the high of day today here at what was that, 556 as the next key level to break. Now the a bullish development for DRYS is on the weekly chart. So take a look at the DRYS weekly chart, and so this really smooths out the data from that daily chart. And as you can see here, there was a bottom down here in July, in July, it bottomed out, hit the lows, and then there was the big load in August. So you could see this huge volume bar, and so this was the signal that players really took positions here. So they were loading here on these two candles, and then the share price has been in a nice steady uptrend ever since. When October, the first week of October, there was a close above this pink line at 392. That's EMA4. That signaled that the chart was really heating up. Notice how the entire time in the history of trading on this chart since November of 2016, DRYS, starting, if you could start here with December, the candles are riding the pink line lower the entire time, and then in October there was a close above, and then now the next three candles, so there's been 4 candles in a row that are looking like they're going to close above the EMA4. The next big level to break is EMA8, 61229 or 612, and then the middle Bollinger Band here at 651. So if it can get a weekly close above 651, above this dotted purple line, that could signal the possible start of a new uptrend. So yeah, so this is the weekly chart's been heating up. Now keep in mind, the middle Bollinger Band is the top of the bearish lower Bollinger Band channel, and so if it could top out at that level, it has to break that level and close above to head higher. If you look back here in June, there is an unfilled gap, okay, between the first or the second and third weeks of June, or between these two candles here, and so it's above the upper Bollinger Band, and so if the middle Bollinger Band turns into support, then in the future, that would be what traders would be shooting for as a potential gap fill. But yeah, first things first, it has to break resistance. If it closes below EMA4 at 392, it will no longer be in play. That is the key level. The only reason why DRYS is in play right now is because it's holding that level. If it closes below, then it will be once again a risk to hold. As you can see, DRYS has it's been a crusher. So yeah. So anyways, keep an eye on DRYS. It's been heading higher. Now take a look at BONT. Okay, so this stock, it's up here at 81 on RSI. It had really nice follow through today, so congrats to everybody. It made a big move yesterday, followed through with a big move today, but it did form the ugly candle. And so if you look here, it's got the super long wick upper wick on today's candle. This signals profit taking, possibly dilution. It's not what bulls want to see. As you can see, it closed below the 300-day simple moving average at 102. Today's candle, real candle body, is floating above the upper Bollinger Band, which is down here at 65. So many times when that happens, the candles have to work their way into the bands. There is an unfilled gap below. If you look here on the chart, there's a gap between high of day yesterday and low of day today. So a drop down here to the 200-day simple moving average at 72, that would fill the gap. So if it came down here, that would fill the gap. But keep in mind that EMA4 is down here at 60, and you've got the upper Bollinger Band at 65. So the close below the 300-day simple moving average is signaling downside risk. That was the key level to break. It needed to close above that level once it broke. Now if it heads higher and it closes above 302 or above the 300-day simple moving average, that would signal more upside potential. Now the big volume with a long upper wick, that is the big sign of dilution. If you look here at the chart that we posted earlier today, you could see this is what we were working on in the chat, and you could see it was hitting resistance levels from back here, and we were targeting the 130s as the key level to break. Notice that was the high close from February. It was the high close here in March, and so we had and then it was support here in April, or in January, February, and March. 130 played a vital level, and so it was either support or resistance, and so we were looking at that as a potential top, and the reason why we were thinking that is because we were looking at the weekly chart, and so anytime a stock is breaking out on the daily chart, like BONT above the 300-day simple moving average today, you have to look at the weekly chart to find resistance. And so when we looked at the weekly chart today, we located the high of day before it was hit. We discussed this in the chat. We put out out alerts. We said keep an eye on the 100-week simple moving average at 133. It had busted above the 50-week moving average at 87, and we were saying this is the next target. It's likely to hit that level and top out, and so keep an eye on it for the chart breaking down. And then it came up and it hit that level exactly, was high of day. So that was played perfect. Congrats to everybody that was in the chat today. And so the share price pulled back, and notice that it did close below the 50-week moving average at 87. It's going to need to close above that level for the week to head higher. If that turns into resistance, then the candles could work their way back into the bands, and you want to see that middle Bollinger Band hold. It's currently down here at 56. Now, a weekly close above the 50-week moving average would be very bullish, and that would put that 100-week moving average onto deck. Notice that it is hitting key high close resistance levels, and so it's going to need to break high close resistance as well from earlier in the year. So yeah, so this was a big pullback today for BONT, and so as you can see here, when it hit 130, 135, that was signaling downside risk. And what we did was we used the 15-minute chart to time all this. So we located resistance on the daily and the weekly chart, but the 15-minute chart is what we used to time this. And as you can see here, there was the big breakout yesterday. This signaled that it was in play. They had the gap up open today. Notice there's a gap. There's an unfilled space in this chart. Once it drops down here to this 50 simple moving average at 71, it will fill the gap. So right now we're looking for a gap fill. It formed, and it needed to, we put out alerts here that needed to break this 1045 closing price. It did that when it formed the ascending triangle. That signaled more upside potential. And then we put out another alert here that this closing price at 1245 was the key level to break. And then we notified everyone about the 134 target. Because we were looking at that, and then it hit this key level, and that was the big. This candle right here was the big red flag to lock in the high of day gains. And then if you didn't lock them in here and you were holding out, waiting, this candle right here was your signal to exit. So if you didn't get out at high of day, once EMA4 support broke and this ascending support line, notice how that was support the entire day. This was the big red flag, the 2 o'clock candle. So it was the early signal was the 1 o'clock candle, and then it was the 2 o'clock candle on the 15-minute chart. Once that happened, candles were riding EMA4 support lower. Now we're down here looking for a reload around 70, 75. If it bounces off of that level, we'll see what happens. Many times a gap fill will be a catalyst for a technical bounce. Now, if it breaks below the 50 simple moving average on the 15-minute chart, that's going to be a signal the chart's broken, and you could see a drop down into the 50s, down here to 52. The bottom moving averages are the 300 and 200 down here at 41 and 43. If you'd like to learn more about charts and technical analysis, and you'd like to get real-time lessons during the trading day where we break it down and show you exactly on the charts how a stock trades and where to find resistance, yeah, please come and join us in the chat. Like we say every day, it pays to be in the chat. Thank you very much for watching this video. You can check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.